Can you start?
Okay, can. All right, Assalamualaikum and good morning to Ms. Nur Hidayah. So today, me, myself, Raihana, and also my friend, Premm, represent to you the final project of our subject, Security Analysis and Portfolio Management. Our chosen two companies are Khind Berhad and also Sunway Berhad. Right, so this is the content of our presentation today. All right, moving to the first part, the introduction part. All right, the objective of this project is to develop the students, which is all of us in the class, to understand the company's technical and fundamental analysis, and to study in depth on the individual security and portfolio management of companies, to measure the risk and return of portfolio of companies, to select an optimum portfolio. All right, next, the reason why we choose these two companies. As for Khind Berhad, the annual report is provided is a comprehensive insight of the company's operations. All accessible information is provided in thorough and user-friendly manner. So it's easy for us to find the data and information of the company. And the last one is because the report allows for direct comparisons between Khind Berhad and its rival company. I will pass to Premm next.
All right. So as for Sunway, the reason I choose Sunway is because obviously because of the massive success that they had over the years. And secondly, I was really interested to know about Sunway Group because they are into 12 different business. So I really wanted to know how does it affect their share price, and especially during the pandemic. Moving on.
All right. So next is the company's background. So Khind Berhad is a major local electronic product company that sells a broad range of products under the Khind and Mistral brands, ranging from basic pans to tiny kitchen appliance. So Khind Berhad KHB is a Malaysian company that makes and sells world-class electrical household appliance and exports to more than 50 countries across the world. So under the leadership of the founder, the company has grown steadily since its inception in 1961. So in 1992, KHP began producing audio-visual device as well as big white goods such as refrigerators and washing machines. So KHB was successfully public listed on the KLSE in 1998 after years of hard effort, and once had a total income of 325 million in 2013.
Right. So as for Sunway, which is also known as Sunway Group, is a Malaysian conglomerate. That means that they are not only in one business. So Sunway City and Sun City, Sunway City, also known as Sun City, and Sunway Holdings, they merged to form Sunway Holdings Berhad just about 10 years. Corporate Berhad was actually founded in 1986 with the only goal of developing a township in PJ. But if we look at it now, we can see that they got into different business as well because of their innovative ideas. And in my knowledge, Sunway Group was listed in Bursa Malaysia in 1984. Right, the next one.
All right, next is the company development. So as for Khind Berhad, we have divided into two types of development, which is the first one is the different kind of products. This means KHB manufactures cost-effective appliances such as air conditioner equipment, kitchen appliance, washing machines, and home renovation items such as lighting and electrical accessories. So the Khind automated multi-cooker MC 50D with touch sensor and digital display, which offer 20 menus, was recently introduced by the firm. So in addition, the firm debuted the newest Midori product line, which includes a stand mixer, food chopper, electric kettle, and thermal pot. So the second part is the rebranding of Mistral. So Mistral is a high brand that sells a wide range of air moving equipment to consumers that values aesthetic, usefulness, and quality over performance. So Mistral also offers a variety of commercial fans, including ceiling fans, wall, table, and stand fans. Okay, that's all. Pass to Premm.
Okay, so for the development of Sunway, we can see that they put in continuous effort, especially during the pandemic. And a different development, a latest development that I see from Sunway is that they actually coming up with a thing called Living Lab. Basically, this lab is to harness their talent and also to create new ideas because they have different business. So this living lab is actually called Sunway Cities Living Lab, which compromises 6 key areas, which are smart cities, edutech, the use of artificial intelligence, agtech, and fintech. Moving on.
Okay, all right. Next part is SWOT analysis. Okay, the strength of Khind Holding Berhad is it's a Malaysia brand, so it's a friendly user for the Malaysians especially. Second one is the strong relationship with Mistral, so it's quite a big advantage for Khind Holding Berhad. So the weaknesses is Khind Holding Berhad's only export their product to only few countries. So that is one of the weakness of this company. The second one is financial weak, but the weakness of financial weak is not for the financial week is not covering for all the years, but it's just a few timeline in the years. Next is the opportunity. Khind Holdings is an Asian of free trade and also it has important role in electricity and environment. The last part is the threat. Khind Holdings also face difficult competitor with multinational, which it's quite difficult for them to stand in their current state only. The last part is that the technology is keep changing. So if the Khind Holding Berhad just stay in that one place without any improvement or development, so it's quite hard for them to survive the company.
Okay, so for the SWOT analysis for Sunway, firstly is their strength. We can see that from just now I said that their diversified industries is obviously one of their main strengths. And also they have a high market value and they are one of the largest property stock in Bursa Malaysia. Under the leadership of Tan Sri Jeffrey Che, the Sunway Group has continued to grow their strength to excellence. Next one is the weakness. One of the weakness which I find hard to find is obviously their overpriced properties, which resulted in unsold inventory value. Even though they managed to sell some of their properties. So the opportunities that I see for Sunway seems that they have really used Malaysia as a platform and developed really well. So I think the Sunway Global in China can be really helpful for them because most of the property projects are developing well to bring in more profit and diversifying in other areas as well. And the threats I see in Sunway Group is that when we see the pandemic, we can see that they are really suffer in terms of property business, and also there are competitive threats from other property industries such as Berjaya or Genting are making moves now, especially Genting. They are moving forward with their theme park. So I think that will be one of the main threat for Sunway. Okay, so for the single asset analysis, firstly is the share price for Khind Holdings and Sunway Berhad. You can see that towards the year 2020, the share price of Khind Holdings keep on increasing. This is due to the pandemic. People stay at home, so they tend to buy this electrical stuff more. They tend to shop more in online. So Khind Holdings really use this time to develop their business. As for Sunway, we can see that it fluctuates all the while. And moving on in 2020, you can see that they suffered a bit due to the pandemic and due to their unsold properties. And the next one is the table that I'm going to explain, which I did in Excel sheet. So for the holding period return, we can see that Khind Holding has a better holding period return, which means that the total return earned on their investment during the time is better than Sunway. So the next one is the average, which is the arithmetic mean. You can see that based on the calculation, you can see that the Khind Holdings Berhad was better than Sunway. And the next one is the standard deviation. In terms of standard deviation, we obviously can see that this is to measure the market volatility from my understanding. And even though I say that Khind Holdings Berhad increased toward the end of 2020, I think that it is more volatile than Khind Holding, than Sunway Berhad, because they are still in terms of developing their company. As for Sunway, they already have a stabilized company since they are in Bursa Malaysia for a long time. So in terms of the coefficient variation, we can see that, like I said earlier, the risk involved in Sunway Group currently is more than Khind Holdings. And moving on to the graphs, the expected return of the portfolio is the anticipated amount of return that the portfolio may generate. In this graph, we can see that the average return of both Sunway and Khind Holdings over time has increased every year. And the portfolio standard deviation is the financial measure of investment risk and consistency in the investment's earning. So in this, in our analysis, we can see that the standard deviation increased, which shows that the portfolio's annual rate of return is somehow consistent. And lastly is the risk-free rate for the CAPM model that we used. So this risk-free rate in the CAPM formula is actually like time value of money in my understanding. And the expected return of a portfolio increases as the risk increases. So I think that the risk was kind of lower when it's coming towards the end of the year, right? Unmute, please.
Oh, sorry. Okay, so next we are moving to the economic analysis. So Malaysia is Southeast Asia's fourth largest economy, and it has performed well in recent years thanks to strong worldwide demand for electronics, growing demand for commodities such as oil and gas, and also improving labor market. So, however, the government's reduced spending as well as weaker public and private investment slowed economic growth to 4.3% in 2019. So, the COVID-19 pandemic has caused the growth rate to drop to negative 5.6% in 2020. So, okay, the Malaysian economic is still in the road to recovery in this year, which is 2021. So this was mainly due to COVID-19 pandemic in the country. So the anticipated reopening of the economy will promote a steady rebound with increased global growth and continued policy assistance. The recovery is likely to pick up steam in 2022, aided by a gradual return to normality in economic activity. All right, moving to the next part, the industry analysis. Okay, let's look on the Khind Holding Berhad first. Okay, Khind Holding Berhad is a producer and marketer of home consumer electrical appliance and industry electrical company. They are basically in the industry of household electrical appliance. So being a Malaysian brand, the Khind brand is known across the board for its value for money products, which are both in high quality and deliver good performance. So due to the current pandemic, the sales of household electric appliances increased tremendously because a lot of people stayed at home and had plenty of time to do online shopping. So looking at the industry, we can analyze that Khind definitely has high competition from internationally well-known brands such as LG, Samsung, Philips. All right. Okay, so move to the Sunway Berhad. Okay, as one of the largest conglomerates in Malaysia, Sunway Group successfully expand their wings into 12 business industries. All right. Okay, however, the biggest industry that Sunway Group are widely participating is the property industries. Okay, looking at the property industry, so the Sunway Group are receiving quite a big amount of threat from other big property, such as Eco World Development Berhad, Gamuda Land, and also Sime Darby Property Berhad. All right, okay. So we have reached the last part of this presentation, which is the recommendation. Okay, in the age of tech stock, blue sky investing, our choice may seem old-fashioned. We still prefer profitable companies like Khind, Holding Berhad. So now we are not saying that the stock is necessarily undervalued today, but we can shake an appreciation that the stock is necessarily undervalued today. So what a well-funded company may sustain loss for years unless its owners have an endless appetite for subsidizing the customer. So in the last 3 years, Khind Holding Berhad's earning per share took off like a rocket fast and from a low base. So the actual rate of growth doesn't tell us much. As a result, we have zoomed in on growth of over the last year instead. So it's good to see that Khind Holding Berhad's EPS, earning per shares, have grown from 57 cents to 63 cents over 12 months. So one way to double check this company growth is to look at how its revenue and earnings before interest and tax margins are changing. So Khind Holding Berhad's EBIT margin were flat over the last year. Revenue grew by a solid 33% to 574 million. So in the chart that we can see here, we can see how the company has grown earnings and revenue over time. So Khind Holdings Berhad is no giant with a market capitalization of 153 million. So we should check its cash and debt before getting too excited about its prospect. So, Madam, your question should be, does Khind Holding Berhad deserve a spot on your watch list? Okay, one important encouraging feature of Khind Holding Berhad is that it is growing profits. Just as polish makes silverware pop, the high level of insider ownership enhances my enthusiasm for this growth. So that combination appeals to me for one. So yes, I do think the stock is worth keeping an eye for you. So we have spotted 2 warning signs for Khind Holding Berhad that we should be aware. So although Khind Holding Berhad certainly look good to me, I would like it more if insiders were buying up shares. So if you like to see insider buying, then this company is one of the list of growing companies that insiders are buying. All right, so that's all for our presentations.
So do you think as a investor, I should invest in both?
Yes, madam. Firstly, I would say that for Kind Holdings, this is the right time to invest in Kind Holdings because if you notice, their share price has increased tremendously in the year 2020, and their brand is getting well known among Malaysians. So I think this is the right time. But in terms of long-term returns, I would say that obviously Sunway Group is the better choice in terms of long-term thinking.
Why you compare between Khind and Sunway Berhad? These two companies, why you compare it together? Because of these two, the what we call that, the industry of these two company is a bit different, right?
Yes. So actually the reason that we choose is because like Sunway Group has been there for a long time, and Kind Holdings is something new, and they also try to come up with new stuff, especially like if you see this like 1 to 2 years time, right? They have really like put in the effort, and I noticed that their share price increased also, like compared to like 2 3 years back, it's like almost double like that. So I thought of like, why not compare something new with something that has been there for some time.
During this pandemic, yes, like you said, that Kind Holding is most have their benefit and advantage. Okay, but Sunway Berhad, even though they fluctuate, they have so many industry under this Sunway Berhad. Okay.
Yes.
So maybe okay, we're not sure, okay, because of the calculation or the figure that shown, okay, in your slide and so on, is not so good. But due to their market caps, okay, that's this Sunway Berhad considered a good company to invest. Is it right?
Yes.
Yes.
Okay, that means you recommend to invest in Kind Holding Berhad in the short term, and then for the long term, we will buy and hold for Sunway Berhad.
Yes.
Yes.
Exactly.
Okay, thank you for your time.
Okay. Thank you so much, madam.
Okay, bye.